Happy Finance Friday. Dave Skirman of First Ontario Credit Union joins us to answer more viewer questions. So we got some great ones. Good morning to you. Can we get right into it?
Good morning,
Because we got
Annette.
a lot.
Yeah. Absolutely. Let's
so
go.
Joan from Simcoe, hey Simcoe, asks, can grandparents contribute to an RESP, RRSP, or TFSA for their grandchildren under 18? And if so, which one is the best option?
Well, that's a great question. So let me go through those options that she listed. Tax-free savings account, unfortunately, not an option because the minimum age to open a tax-free savings account is 18. So that's not an option. An RESP, there's no minimum age, so that could be an option. However, only the individual who owns the RRSP can actually make the contribution. Grandparents could give the kid the money and the kid could put it in. However, the other option there is that, RRSP, you'd have to have earned income. Sorry, I'm a little tongue twisted this morning. So the kid probably doesn't have a lot of earned. Likely not a good kid either. So the best option by far is an RESP, Registered Education Savings Plan. Now that was designed, obviously, for kids from birth up to the time they're going to need the money when they go to post-secondary. And for parents and grandparents, it's a great way to help kids save for that education, which they're going to need. The other bonus, of course, is that the government will contribute up to 20% of your annual contributions every year. So that helps a lot as well.
Right. And Bernice from, I think from St. Catharines, is wondering, what has the better tax advantage for holding stocks within an RRSP or in a TFSA? And what is a dividend tax credit?
As well, great questions, Bernice. Both TFSA and RRSPs can hold a number of different types of investments, including stocks. So either one is good. What you would have to consider is, number one, the limits. Your RRSP, you probably have a lot more room to contribute to in terms of your stocks. You could turn cash into stocks inside the RRSP. TFSA, there's a lot less room because it's only been available for a few years. So that's a consideration. The other one is when are you going to need the money? So if you've got stocks inside an RRSP and you want to cash them out, you're going to have to pay tax on it. So if you have stocks inside an RRSP, it's probably best if that's long-term for retirement. Tax-free savings account, if you have stocks inside there, you could use them at any time and you're not going to pay tax. So that's options to consider. Dividend tax credit, what that is really, it's the CRA's way of reducing the income tax that you have to pay on dividends because of the fact that those dividends have already been taxed. So think about it, a company makes money and they pay income tax on the money they make. And then when they pay dividends out, which is some income, that money's already been taxed. So it's not fair for an individual to have to pay tax fully again on that same money that's already been taxed. So that's why the CRA does that. It reduces the amount of tax you pay on dividends because of the fact it's already been taxed.
Okay, and our final question, we got about a minute left here. Paul from Hamilton says, I recently received termination income due to a company closure. I deposited the check into a savings account for now. What's his best option in order to not pay taxes on that lump sum?
Well, there's a good chance that tax may already have been withheld at source. So take a look at that. So the money that you have got in your check might have been after tax. If that's the case, you could get that tax back by contributing the check to the RRSP or making a deposit to the RRSP, obviously before this year is over. But the other thing on that as well is that you have to have the room in the RRSP. The company that you came for, if they had a pension plan, you may be able to contribute to that pension plan and get that tax back. But there's no other options other than an RRSP or the pension in order to not pay tax, because we have to pay tax, unfortunately, on all the income that we earn.
Yes, and again, that RSP deadline is March 1st. Thanks very much, Dave. And if you've got a financial question or topic you'd like him to cover, email your questions to financefriday@firstontario.com or get in touch through Twitter at @finance_Friday. If your question or topic is covered on air, like the great ones we had this morning, you can win a gift card from a local business in your community. Thanks, Dave.